What up, everybody? I had to unmute myself. Hey, how's it going? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. I've changed a lot of things about today's show, lots of variables. So, I mean, that's how I do it. Just go big or go home. So, lots of variables that I've changed about today's show. Obviously, you can see one of them and bringing back some old things. So, perhaps you can appreciate, for those of you who've been subscribed for a while, the old countdown. Listen, I forgot how much I love that countdown, so it might be here to stay for a while. But before we get into anything, what's going on? Let me shout out some people. I think somebody came in before Kevin Hawthorne, and I apologize, but I'll get to my starting five here. I do see Kevin Hawthorne here, Bodie Beer, Jake Lipton, Tom Alms, and Lindsay Heist. You guys are my starting five. If you didn't make the starting five, it could be because, hey, you didn't subscribe, you haven't hit that notification bell. So make sure you're doing that. Show it up early, nice and early when you get notified that I'm going live, and comment. And you might just get shouted out in that starting five. So what's going on, everybody? Just checking out the markets right now. I mean, it's very interesting. Things are mixed, but tech is leading the way. No big surprise here. The S&P 500 is up 0.86%. Dow's down 0.5%, and the NASDAQ is just absolutely ripping. It's up 2.65%. It was up as high as 3% today, sitting up 313 points. WTI crude sitting at $75 a barrel, and then we're looking at Bitcoin sitting at 28,000. That'd be something. 23,800. That's up 400 points today, and it seems to be moving right along with tech. A lot of this had to do with the Fed. People kind of not really, I don't know, being in the camp that things are going to get bad. And it seems as if they're not. It seems like things are feel a little bit better. And a lot of the tech stocks have come down to reasonable levels. Whether you believe that or not is neither here nor there. On the charts, it looks pretty damn good. We take a look at SPY right now, and you can see that it is doing quite well. We can break it out to the these are the Qs. Sorry, this is the Q. This is SPY as well. We break it out. Don and I talked about this on the show yesterday, but pretty decent breakout from this downtrend. And we're coming up on the close of the week. Tomorrow's Friday. If we close above this downtrend at the close of tomorrow, I'm feeling a lot better about the S&P 500. You know, I've speculated for the last couple of weeks that we would see a 20% move in the S&P 500 this year. And I think that I'm sticking to that. I'm not going to deviate. You know, there was, for the last couple of weeks, I was kind of like, well, let's just wait and see. I'm buying into it now. You have Meta Platforms, which we covered yesterday and yesterday's earnings, and it came up to a pretty interesting resistance at around 187. It looks like it's going to close right around 187 today. And I mean, just absolute monster move on that earnings, or that buyback yesterday that they announced during the earnings, $40 billion buyback on Meta. And that is an additional buyback, by the way, from all the other buybacks that they're already doing. So 10% of the outstanding shares are going to be scooped up from Meta. I mean, what an absolute monster move. And of course, that's contributing to the Qs. You can see the Qs also. This is your weekly chart, by the way. I've been looking at all these tickers on the weekly chart, and this is also very interesting. If we just draw a downward trend line, this is also starting to break the trend. So you can see here, again, on the weekly, broke over the 50-week moving average, breaking out of this downward trend. I think that, guys, I'm just all but saying that we have bottomed in the market, so I'm feeling pretty good about it. But as the title says, we're reacting to earnings today. It is going to be a very big day. We have Apple, Amazon, Google, Starbucks, Ford, lots of other ones that are going to be reacting to as far as earnings are concerned. Obviously, the big ones are in big tech. We're going to round out big tech towards the end of the week here with Apple, Amazon, and Google. I don't know if there's a lot that we're going to be surprised about unless something comes way out of left field, right? We've already heard from a lot of other stocks such as Meta and Microsoft and Snap, and the theme doesn't seem like it's going to change a whole lot. Amazon will be an interesting one. I mean, Microsoft has talked about how their cloud computing space has grown significantly, and I think that AWS will be interesting to keep an eye on there. Let's take a look at some of the expectations. We have Apple right now that we're expecting $1.95 earnings per share, $121.65 billion. Amazon's expected to come in on earnings at approximately 17 cents per share, $145.77 billion. These are just absolutely monstrous numbers, guys. I mean, I can't even fathom that number for one quarter. Expected earnings per share for Alphabet, aka Google, $1.20, $76.49 billion there as well. Lots of downward revisions on all of these. And I think that the downward revisions are wrong. I mean, obviously, we're looking at a lot of these right now that are just crushing it, absolutely crushing it. Alphabet right now, year to date, is up 20.5%, not including today. You look at Amazon, and that's up 6.5% right now. Year to date, it's up 30. Well, so if you combine today's gains, it's up 37% year to date. Apple, similar story. And we saw that with Meta. Meta is now up 50% since the beginning of the year. That's absolutely insane. Yeah, 19% for Apple. You include today's gains, it's around 22. So look, I mean, Fang's back in control, I think, as far as I'm concerned. I think that's going to stick. I think it's going to stick around. Checking in on some of your guys' comments here. Michael Hanna loves the background. Yeah, the background, I feel like I got CoffeeZilla vibes. It's like stock market CoffeeZilla version. Snooker loves a new background. Yeah, appreciate you guys. Appreciate you, the work that I'm putting in here. So that's awesome. Greetings from Finland, says Lori Caillou. Yeah, thanks. Appreciate you. Yeah, let me know where you guys are watching from. Got about 96 of you in here so far. I'm sure that we're going to have several hundred as we get closer to the bell. And it's going to be a lot of fun. We got about 6 minutes to go. So we'll be reacting to these earnings. Welcome, guys. Hit that thumbs up if you haven't done so already. And if you're not subscribed, if you're new here, welcome to Own the Chaos. This channel is dedicated to really kind of tracking earnings and helping everybody make better investment decisions, and myself included. I'm not a professional investor by any means. Used to be registered in the financial world and worked for a very large firm, and decided to get out of the corporate world and do things on my own. So I'm a commoner just like everybody else. And so if you're not subscribed, consider doing so. We're going to cover all these earnings. I'm live Monday, Wednesday, Thursday, or Monday, Tuesday, Wednesday, Thursday, Monday through Thursday. And guys, I'm also going to be taking phone calls today too as well. So make sure you're sticking around towards the end of the stream. I'll answer your guys' calls. And I'm looking forward to that. We just started that this week. Also, I'm really strongly considering doing earnings reactions in the morning. Let me know what you guys think about that in the comments as well. Would love to get your guys' thoughts. Would you show up? Would you tune in for morning streams on reactions to earnings? Just want to get your thoughts on that. Is the background AI, says Z-Raider? Nope, just a simple green screen, my friend. But Uncultured Currency, what's up, man? Says hello, let Amazon run. Yeah. All right, let's check back in on the charts, actually. So Amazon, yeah, is up a ton right now. I'm going to pull that up. By the way, anybody else feeling hella bullish right now? Am I still in the minority? Here's your weekly chart on Amazon. It's not quite broken the trend like the Qs have, or like Meta has, or even like the SPY has, as we've talked about. But Amazon, from a valuation standpoint, is the most expensive one out of all the FANGs. So it's not really that surprising. I would say, I don't think Microsoft has actually bucked that trend either. They might have. I haven't looked at them in the last couple of days. It's looking like it's starting to. Here's Microsoft again on your weekly chart. And I'm digging it so far. I'm digging this one. Microsoft's up 4.25% today. Crazy. Crazy moves in the market today, guys. I'm loving it, though. Feels good. Feels good to not be so negative all the time. Just want to check in on some of the comments here. People loving the background. That's awesome. Keeping it real, y'all, says that feel like we're sitting on a house of cards. Interesting. Shock City Rocker says, I'm skeptical the run-up was too much too soon, in my opinion. Yes, if you guys were around and observed the market during 2008, 2009, this may not come as a surprise to you. But if you're newer, you started investing after that, then it's understandable that you would feel that way. But 2009, and I've been saying this a lot lately, 2009 was a terrible year for Main Street, and the market returned 19%. Why? Because the stock market is a forward-thinking vessel. It looks forward all of the time, usually about a year, 6 months to a year is how the market trades. You look at 2008, 2009. 2008 was a terrible year. Obviously, stock market crashed from about August all the way to the end of 2008. And then 2009 had a 19% return on the S&P 500. Why? Everybody was losing their homes in 2009. Businesses were closing. It was just a bad year for Main Street. Wall Street, however, it was fantastic. And that's why I think that's what's going to happen right now. We're going to feel it on Main Street. People are already losing their jobs in big tech. I think that filters into some things. I don't think it's going to be anywhere near like a 2008, 2009 type recession. I'm just saying that the price action in the market is probably going to reflect something like that. It's going to emulate. We're going to see, we're going to reminisce a little bit on that 2008, 2009 type of move. So I think we could see a green year in the S&P 500 in the stock market in general. I think it's going to be 15 to 20% move in the S&P 500. And yes, I know that sounds like a lot, but I think that's the move we see. And I think it's going to be a broad rally. I don't think it's going to be just led by tech. I think it's going to be a little bit of everything. So some of you guys are chiming in here. Savvy Money Show says, I get worried when everything runs like today. I'm not used to so much green. For sure. I think that there is going to be some pullbacks. I mean, the S&P 500, the SPY right now is, which we have about 90 seconds to go before we react to these earnings. The SPY right now is up quite a bit. So I'm expecting some sort of pullback, but I don't think we retest the lows at all. If we take a look at the year-to-date performance, the SPY is up 9.25%, right? I just got done telling you that I think that we see 15 to 20% move in the S&P 500. It's only January. So this isn't going to be a linear move to 20%, right? We got 11 months to go to the end of the year. So I do think that we are going to see some sort of pullback. I'm not saying that we should just bet the farm and go all in right now. I think there's going to be opportunities, but I think the opportunity to grab the bottom of this market that we saw back in October-ish, October, November, I don't think we see that again. And there's nothing in the market that's really telling me that. Unless something comes really crazy, right, like out of left field, that to me, I just don't see how that happens. And give me a reason as to why. If you disagree with me, tell me why. Because right now, I mean, we just got through the Fed. They're raising it another 25 basis points yesterday. How'd the market respond? They bought the shit out of it. Right? I mean, they really did. So let's take a look. I'm gonna bring the chart back up. And this is where I wish I had my Stream Deck back. There we go. So here's the market. Microsoft I just have pulled up, but we are going to be reacting to Apple, Amazon, and Google, as well as Starbucks and Ford. Some of the other ones that are also going to be reporting. It's about 150 of you guys in here. I'm expecting to see this stream do really well for obvious reasons. So if you guys wouldn't mind, if you're new to the channel, subscribing. I do react to earnings every day, Monday through Thursday. Also, be sure to hit that like button if you're enjoying the stream so far. I certainly would appreciate that. Only 33 likes. I think we can do better. So if you're liking the stream, please hit that thumbs up. I'd appreciate it. Okay, so let's go ahead and pull up. Let's pull up Google right now. Oh. And we'll go to the 5-minute chart so you can see that real-time price action. The market is officially closed. Just closed about 30 seconds ago. And let's see what we can grab. So Google right now, not too much movement. Amazon, just slightly selling off. Again, it's still very early. We'll pull up Apple as well. Pull up Ford. And then Starbucks. Starbucks might be sneaky good. I put a poll in the chat. I see that you guys have been responding to that. Hardly anybody has picked Starbucks. I think that might be the sneaky good one. I think it might be our dark horse today on surprises. No definitive reason as to why. I think that it could be. That's all. So Starbucks, their expected earnings per share is 77 cents, $8.78 billion in revenue. Lots of upward revisions on that one. Ford is going to be one that I don't think has a ton of surprises unless they completely shit the bed or what have you. That stock was up 4% today. 62 cents earnings per share expected, $40.73 billion in revenue. Right now, the Ford's sitting here at just a fraction down after hours. No real strong moves just yet. Amazon's starting to creep up here, which, I mean, I can start to pull that up. Let's see here. Let's see if I can find some numbers on Amazon. Let's see. Nothing on Amazon just yet. Here we go. They beat expectations, earnings expectations of actually, let me just double check. I want to cross reference here. It looks like they came in at 3 cents. As I'd mentioned before, Amazon was expecting earnings per share of 17 cents. They came in at 3 cents. So they missed expectations on earnings there. Right now, the stock is surging here after already being up 7.5%. It's up 3%. So they missed earnings per share. Let's find out what's going on here. It could be a sales beat. It looks like it is, and that could be what's moving the stock here. They guide Q1 revenue. Yeah, okay, here we go. So here's your numbers. As I mentioned, Amazon came in at 3 cents per share versus the 17 cent estimate. Revenue came in at 149.2 billion versus 145.4 billion. So absolutely crushed expectations on sales. The guidance here also Q1 revenue 121 versus 126 billion versus the 121 to 126 billion versus the 124.5 that was expected. So that's pretty good as well. The stock's given back a lot of its gains. It was up 3.5% and now falling into the red. Interesting. Looking to see if I can find any reasons as to why. It doesn't look like there is. So we'll just continue to watch. It's still early yet, obviously. Now the stock's down around 1.5%. Net sales increased 9% to 149.2 billion in the fourth quarter, compared with 137.4 billion in the fourth quarter of 2021. So that is this time last year, excluding the 5 billion unfavorable impact from year-over-year changes in foreign exchange rates. And that was something that I had talked about in my Apple video. If you guys caught my Apple expectations video that I put out last night, foreign exchange issues seem to be mitigating a lot. And it seems as if Amazon is also seeing that as well. Stock is down around 1% after surging 3.5% after hours, and on already a 7.5% day. Pretty decent move out of Amazon. Google is also moving here. Let's take a look and see what Alphabet has in store for us. So let's go ahead and tune into Alphabet, see what we got. Google reports Q4 Google Cloud revenue, $7.315 billion, up from $5.5 billion year over year. I believe that is a beat on expectations. Cloud revenue came up $7.315 billion, up from $5.54 billion year over year. So really good growth here. Here's the big thing. Advertising. Q4 2022 Google advertising was $61.239 billion versus $59 billion year over year. That is a massive beat for Alphabet. And the stock was up 7.5% today, as well as Amazon. And you can see that it's kind of flat. So here's some more numbers from Google. Google was expecting, I'm just going to keep saying Google. Everybody knows it's Alphabet. Google was expecting $1.20 earnings per share, 76.49 billion. They came in at $1.05. So they also missed on earnings per share, but they came in 76.05 billion. As I'd mentioned, 76.5 billion was what was expected. So they missed on earnings and revenue. YouTube ad revenue was up, though. It looks like 7.96 billion. Alphabet came in with Q4 operating income of 18.16 billion. I think that's also a miss. So it's interesting to see that. Okay, this is starting to turn back down. That makes sense. So interesting reactions here to Google. Stock's down around 1% now. It also had surged up around 2.5% and now giving back all those gains and turning red. It's now down 2.5. Amazon's also down 2.5. We're still waiting on Apple's earnings. Ford's up 1.33%. It looks like those earnings might be out as well. Starbucks also sinking here. Let's see if it's going to pull up here. There we go. Starbucks is down around 1.5%. Let me tune back into your guys' comments, see what your guys' reactions are here so far. So I see a lot of you guys putting in the stats, so I appreciate you. Uncultured Currency says, I would like for Google to tank so I can buy it. Stop Console Wars says, let's go. I've been both in Google and Apple, ready for whatever. M. Nice says, I think Starbucks will be the biggest percentage mover. Yeah, taking a look at Starbucks, it is actually down around 2%. Had an initial drop of around to $103.83 after closing today at 109. Let's pull those up. Pull up those numbers for Starbucks. They came in guiding Q1 adjusted earnings per share of 75 cents. 77 cents was the estimate, so they missed on guidance. Q1 net revenue, $8.7 billion versus $8.75, so another miss on revenue for Q1. That's a quarter that we're in right now. They came in adjusted earnings per share of, let's see here. Just want to double check some numbers. They reaffirmed the 2023 fiscal year guidance, but it looks like they missed. They missed on guidance, that's for sure. 75 cents, yeah, versus 77-cent estimate. 8.71 billion versus 8.78 that was expected for that quarter, and then also came in guidance light on expectations from the street as well. So stock is not doing all that hot right now. It's down around 3%. I think this is okay. I mean, you're looking at Google right now. The stock hasn't even begun to give away any of its gains from just today alone. So while, these aren't great numbers and they're turning down today, hasn't quite yet given back anywhere near what the yearly gains are, or the year-to-date gains are, and certainly not giving away too much of today's gains either. Amazon, on the other hand, starting to creep that way. If you guys didn't catch the news on that, Amazon did miss on earnings per share, and they beat on revenue, but I think they came in light on a guidance as well. So the stock's down around 5% after hours. Looks like they came in net sales expected to be 121 billion to 126, or grow between 4 and 8% compared with the first quarter of last year. This guidance anticipates an unfavorable impact of approximately 210 basis points from foreign exchange rates. Operating income, this is from their earnings report, by the way. Operating income is expected to be between $0 and $4 billion compared with 3.7 for the first quarter of last year. This guidance assumes, among other things, that no additional business acquisitions, restructurings, or legal settlements are concluded. So could be contributing to the sell-off here a little bit. But they guided operating income flat to $4 billion versus $3.5 billion. AWS numbers, revenue $21.38 billion versus FactSet's expectations of $21.8. So also missing that expectation for AWS, which is an important part of their business, right? Operating income, we already talked about. Just looking at a couple of other numbers here to see if there's anything interesting worth uncovering. But it looks as if, because of the miss and the light guidance, that's why. It is trying to claw its way back here, though. It was down as much as 5%, now only down around 3.5%. And then again, that's after a 7.5% move just today. So while I don't think that this is great news for these two stocks, meaning Google and Amazon, the market isn't reacting all that terribly, to be honest with you. I mean, again, you just heard me tell you that Amazon's up close to 40%. Google's up quite a bit too. So neither one of these have given back today's gains at all. I shouldn't say at all, but they haven't given back today's gains. Looking at Ford, though, that stock is now down 6%. It was up on our initial reaction. Let's take a look and see what happened there. Let's see. Ford automotive revenue came in at 41.8 billion versus the 39.82 that was expected. So they beat on revenue for Q4. And then adjusted EBITDA 2.6 billion versus 3.45. So that was a miss there. Trying to find earnings per share for you. They came in 51 cents per share versus the 62 cents per share. So that's the big miss there. Again, 41.8 billion versus the 40.3 billion that was expected. So they missed on earnings per share, beat on revenue. Stock's down around 6%. There's got to be a bigger reason as to why the stock's down other than an earnings miss, because the revenue was good. The revenue was really good. It's got to be guidance or something along those lines. They crushed the revenue expectation. I mean, absolutely crushed that. Stock's down around 4.5%. Let's see. Pulling up guidance here as well. In October, Ford confirmed its prior full year guidance of adjusted earnings before interest and taxes between 11.5 and 12.5 billion through the first 3 quarters of the year. It's brought in 7.9 billion, led by its North American operations. If Ford meets or exceeds Wall Street's top and bottom line expectations, earnings per share were more than doubled the 26 cents it reported for the same year period earlier. Revenue would be increased to 14.5%. So revenue is a huge increase. I mean, massive. Stock's still tanking here around 6, almost 7%. Ford looks like a buy to me, honestly. Sales crushed it. Sales crushed it. Hit that like button if you guys are enjoying the stream so far. Certainly would appreciate that. We've reacted to all earnings except for Apple, which Apple usually doesn't end up reporting earnings until 4:30. So I see M. Nice asking about no buybacks announced by Google or Amazon. I mean, listen, Google announced a huge buyback. So they announced a huge buyback back in June of last year? June of last year is when they did the split. And I think there was a buyback then too. I believe it was like $50 million buyback. Obviously, it's pocket change compared to Amazon or Apple's, which was $90 billion. And then we just heard from, of course, Meta. But I wasn't expecting a buyback from either one of them anyway. I was expecting to see decent advertising sales from Google based off of what we saw from Snap and Meta, and it looks like we did. I still think Google is going to be good despite the move down. I don't think that there's anything to be too upset over. Oh, gosh, I'm looking at Ford. Look at this on Ford. This is crazy. Ford's still sinking. This is a strong overreaction in my opinion. Let's come back out to the weekly chart so we can kind of see where it could end up coming down to. So that 200-week moving average is at 11.15. Stock's sitting at $13 right now. I think that there's a possibility that maybe we revisit that $11 area. If it does, I myself might scoop up some Ford, honestly. I think this is a strong overreaction from an earnings miss after a revenue beat. And they reaffirmed guidance. It looks like to me that they reaffirmed that guidance. Let me double check on that, but it looks to me that they reaffirmed guidance for Ford. Checking back in on some of the other ones. If you guys are just tuning in, Google actually beat earnings as well. We'll come back to the 5 minutes so you can see that. Stock's down around 5% now. Still hasn't given away all of the gains from just today. So still not mad at that. But they missed earnings. They beat on revenue. And so the stock's down. I think that guidance here isn't great for Google. Ford is to pay a supplemental dividend of 65 cents per share. As mentioned, 51 cents per share versus 62 was the actual. Revenue came in at 41.8, beating expectations of 40.37. Stock's down around 8%. Like I said, I think that is a strong overreaction. Of these earnings so far, Ford's looking the most attractive to me, believe it or not. Google came in, as mentioned. We talked about Google. Let's check back in with Amazon. Amazon's down 4.5%. Let's see here. Amazon came in 3 cents per share was the actual. The expected was 17 cents per share. They came in with $149.2 billion versus 145.45. So sales were absolutely crushed the expectations. They reported quarterly earnings again of 3 cents per share, and so mixed earnings from Amazon to say the least. Stock's down around 4.5%, but as a reminder, it was up 7.5% today. So I don't know if anybody who's an Amazon holder right now, unless you bought 5 minutes before the close, should be upset about today's movement despite some mixed earnings. They reported quarterly sales of $149.2 billion. I mean, it's a huge beat from what expectations were, and it's 8.5% increase over sales this time last year. So still not bad at all. Give me guys' thoughts so far on earnings. Looks like some of you already chiming in here. The 1D Lee, great to see you back with regularity. Thanks, man. Appreciate that. Yeah, I'm back, baby. Appreciate that. Let me know what you guys are thinking about earnings so far. About 308 of you guys watching. Make sure you hit that like button if you're enjoying the stream so far. I certainly would appreciate it. Thanks so much for tuning in to today's stream. We're reacting again to Apple, Amazon, Alphabet, Starbucks, and Ford's earnings. There are other ones. If you guys want me to take a look at those, I certainly can if I have time. Also, be on the lookout for me to take some phone calls towards the end of the stream. So make sure you're sticking around for that. Any other stock market YouTubers out there that take phone calls in their live streams? I don't think so. I haven't seen it. So hit that thumbs up and hit that subscribe button. If you want to, if you like that feature. Pittsburgh T says, need to rate #1 on earnings podcast. Yeah, that would be awesome. Sid's vlog says, I was expecting Google to push north of 110. Yeah, I mean, off these earnings, I don't see how it does that. Let's check back in with Google. And it did surge initially, but obviously has now given back all those gains from the initial reaction. And the initial reaction was probably based off of those revenue numbers and weren't really focused on earnings per share, because all of the big tech stocks, if memory serves, missed earnings per share, but the revenue was there. And I think a lot of that has to do with, as mentioned from Amazon, Forex numbers, foreign exchange has hit them pretty hard, over hiring. So, and they've already started to do layoffs, which we haven't heard from Apple yet about that. I don't think we heard anything from Amazon this earnings report. Amazon has done layoffs. Alphabet has done layoffs too. And we just heard from Microsoft, and they laid off 10,000 employees about a week and a half ago. So it'll be interesting to see if Apple comes in and does the same. I mean, Apple's sitting on a pile of cash. I don't think that Apple actually overhired. That's the only thing that I'm kind of like struggling with on the Apple debate, as to whether or not they're going to be, and we'll check. Let me just pull up Apple's chart here. I don't think that, I would be surprised if we saw a layoff from them. I don't think that Apple actually overhired. They might have, but I don't think they did as much as, certainly not as much as Amazon or Microsoft for that matter. So it'll be interesting to see if Apple does this. You can see that Apple had the initial move down on all the other tech stocks that reported already today, and it's starting to creep back up. Now, we got another 10 minutes to go before we hear from Apple, so we'll sit around and wait for those numbers to come in. But man, I don't think that there's really much to be concerned about as far as that's concerned. If Apple does come in and say that we are laying off, 5% of our work staff, watch for Apple to actually make a pretty decent move up. Lots of people don't like layoffs, right? People who work for the companies don't like layoffs, but investors, they love them because they're going to save money. To a certain extent, it's funny when you make the argument of saving money. Microsoft laid off 10,000 employees and it cost them $1.5 billion in severance pay. I mean, it's nuts. Oliver Thorpe asks, are you saying that we can dial in and get on the show? Absolutely, you can. You will be able to do that. Just wait for the end of the show. I'll throw the number in the chat. I would love to hear from you guys. But yes, you will be able to call into the show. So make sure you're sticking around to the end of the stream if you guys want to call in. Let's see here. Checking in some other comments. M. Nice says, but with 7% inflation, shouldn't you make at least that on? No, not necessarily, because that's a great question, M. Nice. So M. Nice is basically asking, so I'll just repeat it. With 7% inflation, shouldn't you make at least 7% year-over-year growth? And yes and no, right? Amazon, a lot of the other tech stocks have had to keep up with wages, right? Things have been costing more to ship. So it all comes out in the wash in the end. And in fact, it ends up hurting them more than helping them. They aren't able to raise prices as fast as it's costing them to send out products, right? So there's a lot there to unpack. Lots of variables that are creating those extra costs for these companies, especially something like Amazon. So no, it's not as simple as that, unfortunately. Uncultured Currency said, I think it's time to sell all your stocks like me, Kevin, in 2022. Nope. I think it's time to do the opposite. Not go all in just yet, but I think it's time to put a healthy amount of money back in the market for sure. Just my opinion, of course. Watch out below when Apple craps the bed, says Icky22. Apple gonna save the day, says C-Buck. We'll see. Colin Williams says, haven't been around a while, but are you still doing Shit or Legit? I've thought about bringing that back, but it didn't seem like anybody. And anytime I did Shit or Legit, I saw my concurrence just drop off. So I just figured that there was not a very large amount of people that cared for that. So I stopped doing it. Blake C says, if Apple botches earnings guidance, then it's taking everything with it. For sure. But here's the thing about Apple's guidance. They always lowball it. They always set the bar low so they can hop over it, so they can leap over it. So don't be surprised if they actually end up lowballing the guidance this time around too. I don't think it brings the whole market down. What I think will bring the whole market down for Apple is if they come in, we're already expecting hardware to be down, but if they come in with like the services side, a miss on services, that's going to be really bad for Apple, really bad. And that probably will bring a large part of the market down. The Qs and the S&P 500 specifically is going to be not going to have a great day tomorrow. So Blake C says under promise and over deliver, wise management. Yeah, 100%. But that's what they do. So I'm not expecting great. King Hargrave says bring back Shit or Legit. All right, I'll think about bringing it back. If you guys are visiting, if you're coming back first time in a while, first of all, I appreciate that. Appreciate you guys coming back. I'm obviously changing some things up. I'm going back hard into Own the Chaos. I've taken a little bit of a hiatus just to seek out other business ventures that I thought might end up benefiting me. Turns out that they didn't. So I'm 100% dedicated back to Own the Chaos. I'm actually considering going live in the mornings as well to cover earnings that break in the morning. So you're going to see a lot more of me. So hit that thumbs up, hit that notification bell so you get notified when I do go live and put out videos because I'm going hard on the chaos, man. Lots of comments coming in. Appreciate the love, guys. Hit that thumbs up if you haven't done so already. And let's take a look back in at Apple's chart here. So not too much movement. I think in about 5 minutes is when we're going to hear from them. That's usually, historically, we hear at 4:30 is Apple's earnings is when they report. So let's check back in on some of the other stuff. So we've covered everything else. Starbucks comes in and doesn't do well in earnings either. They actually missed. I thought that this would kind of be my little dark horse that actually did well. Turns out, I was wrong on that. It's down 4%. Ford's clawing its way back. It was down 8%. I mentioned that I thought that was a strong overreaction to those earnings numbers. They came in with strong sales. The automotive market has been really resilient, and we're over the supply chain issues as far as chips is concerned. We heard that from AMD. Intel is a whole different ballgame because God, they're just garbage. Um, at least for now. At least for now, they are. Sorry for all you Intel holders. I we're gonna hear from Nvidia, I think, in about 2 weeks. So that'll be interesting to hear from them. But we heard from NXP as well. They didn't have a great quarter, but I think that they even admitted that supply chain issues are no longer a problem, and the automotive market has just been resilient. It just has. So I think that 6% move down on Ford is a bit of an overreaction. I think it's going to be worth grabbing the dip on. Maybe not right now or tomorrow. Give it the 3-day roll. See what happens. I think I might end up doing that myself. Alphabet's also moving back up. Listen, this is craziness, right? Even if Alphabet closes flat and after hours trading, consider yourself lucky. Consider that a good day, because the stock was up 7.25% today, and it's only down 4% right now, off of some not great numbers. Amazon the same way. Amazon was up 7.5%. It's only down 4.5% right now, on some not so great numbers, right? I'm just trying to find a silver lining for those of you who are long on this stuff, because I don't think I'd be that mad at this performance. You know, earnings weren't great, but the stock isn't actually reacting to that badly, all things considered. Uncultured Currency says, would you be down for me to interview? The podcast to do is called Money Market Truth. Got acquired by a bigger channel with 71,000 subs. Yeah, for sure, man. Hit me up. Hit me up on Twitter, @Own the Chaos. I'd love to be interviewed. Hop on an interview. That'd be cool. When Grindr reports they're going to rainbow, not moon. Oh, shit. That's hilarious. All right. We're about 90 seconds away from Apple's earnings. I'll get that pulled up. You guys have been awesome today, by the way. Hit that thumbs up. Certainly would appreciate it if you guys hung out. Also, if you haven't checked out the Chaos Crew, whether it's through the channel memberships or my Patreon, consider doing that as well. Sundays, I put out a private video of just stocks that I think are worth watching. I also plan to do a lot more with my Chaos Crew over there. Lots of supporters in the crew. We're going to be revamping our Discord as well. Like I said, just getting back into the swing of things. And for those of you who stuck around, I really appreciate the support. But I'm going to do right by you guys moving forward. So we're going to revamp that. If you want to continue to support me, support the channel and everything that I got going on, consider going to check that out. That's not going to break your bank. I mean, it starts at $5 a month. So give it a shot. We'd love to have you guys be a part of the crew, grow the community that way, and continue to support me as well so I can keep doing this. Certainly would appreciate it. Apple's still flat. We got about 20 seconds before we hear from them on their earnings report. I have my refresh button ready to go to see about Apple's earnings and our reaction to them. So you can see that it reacted to all the other big tech, Google, Alphabet, that reported. And here we go. So immediate sell-off right out the gate. Stock's down around 3%. Still falling. Again, it's very early, guys. This is a very early move. So don't get too crazy with this, but it is down around. I can't even keep up with it. It's moving all over the place. It's moving it's gone down as low as 3%. There it is. Now it's down 3%. Still waiting for those numbers to come in, but the report is out. If you guys caught yesterday's video, I told you that I felt bullish on it. Obviously, it's not moving like that right now. So sometimes being the outlier makes you look really smart. Other times being the outlier makes you look real dumb. I think today's one of those days where I just look dumb. Stock's down now around 4.5%. Yikes. Looks like they missed earnings per share. A rare miss from Apple. $1.88 versus a $1.94 estimate. Sales came in at $117.15 billion versus 121. So they missed on both earnings per share and revenue. So as I'd mentioned, 117.15 billion versus the 121 that was expected. $1.88 versus $1.94 expected on earnings per share. Yikes. And stock is still plummeting. Look, it's falling off my chart here. Let's there you go. There's a better picture. So not a great day for big tech. I mean, listen, you know what they should have done? They should have pulled a Mark Zuckerberg, right? And announced a giant ass buyback to offset a not so great quarter. But those are your numbers from Apple, guys. A miss on earnings per share as well as a miss on revenue. But let's see what else they have to say. It's still early. This is your initial reaction. Sometimes guidance can be come up better on top. Now, one bright spot, I guess, here, and I mentioned this in last night's video, so I was right about this. iPhone revenue came in higher than expected, $65.8 billion versus I read it backwards. I take that back. I was wrong on this one too. iPhone revenue came in at $65.8 billion versus $68.3 billion expected. Oh man, so not a great quarter all around on the hardware side, but a lot of people were expecting hardware to not perform well. As I'd mentioned, services certainly going to play a factor here as well. But overall revenue came in at 117.2 versus 121 on that expectation. So, yeah, I mean, it's rough for Apple. But again, you know, I know I keep coming back to this, but there should be something to be encouraged by this. Because the move down isn't anywhere near what I think it could be. And it's early, right? It's early, but we look at all these companies that missed on expectations. And I'm talking Amazon, that's down 4.5% right now as of the close. Google's down 3.5%. Even Apple's the only one that is now down lower than where it closed at today. Apple closed the day up 3.7%. It's down 4%. Alphabet closed up 7.25%. It's only down 3.33%. Amazon was up 7.5%. It's only down 4.5%. So these reactions, I don't think are that bad, all things considered. Starbucks still taking a shit. It rendered red. It's still red. That's just not good. Ford is an overreaction, in my opinion. They missed earnings per share, but then crushed it on auto sales. So I think that's something to be encouraged by. Also, by the way, Mach 3 is the third most popular EV in the country. Not saying that they're going to take over Tesla, but they are taking up market share, period. And I've said this from the start, that Ford was going to be number 2 to Tesla. I don't think it's going to be close to anybody else. I think Ford's going to crush everybody else in the EV market, not named Tesla. So keep an eye out for that. I think that Ford's definitely worth scooping up here, in my opinion. Apple's still down. If you guys are just tuning in, we just now got Apple's earnings in, and they missed. A rare miss on both earnings per share and revenue. I can't tell you the last time they missed. Did they miss? They didn't miss last quarter, right? I should have pulled that up. Actually, I can pull that up. Hold on. I can tell you right now if they missed last time. Apple last time around, yeah, they beat last time. They beat revenue and earnings per share last time around. I've never seen them miss both revenue and earnings per share. I don't want to say never. It's been a long time, I think, since we've seen that. But some pretty rare misses this quarter, even for Microsoft. I mean, Microsoft, I think, had quite a stretch of beats despite economic conditions. Apple's now down 4.2%. Getting some of your guys' reactions. Time to launch the iCar, says Arfin. Hey, Arfin, what's up, man? Haven't seen you in a minute, brother. The iCar, yeah, for sure. They announced the iCar. This stock goes bonkers. Icky22 says I got a huge short on the Qs. Let's see how the Qs are doing after hours. Yeah, it's down 1.5%. I don't know if I don't know if I'll be putting a huge short on it, but good luck to you. Hopefully, you're making some money. We'll see. Apple's first miss in 7 years, says Savvy Money Show. Thank you for that. Yeah, I was going to say I don't think it's been a long ass time. I've been in the world of finance for 10 years. Um, Ultra rare miss for Apple on earnings and revenue. Um, Michael Hanna says, for the first time, I'm right on Apple. Yeah, first time in 7 years. A miss comes in. Cinestyle says, I made $7 on my one share of shorting Apple. Nice. Go buy yourself a Starbucks coffee. So, go buy yourself some Starbucks. One coffee for $7. Stop Console War says, big silver lining is as so many other companies, even the big players miss on earnings. They still keep seeing SoFi crush. We still keep seeing SoFi crush earnings. They keep proving to be a great company in the drought. Yeah, one of the advantages that SoFi has is because they are so small still. Like they're still a startup. I don't want to say startup because they've been around for a long time, but they are still a small player in a very big industry. So they're supposed to be growing at the rate that they're growing, right? And they are outshining their competitors. Make no mistake about that. I mean, they're crushing Upstart and some of the other ones. But Blake C says, no surprise with all the China nonsense. There's been a lot of China nonsense, though, over the last 7 years, and Apple's overcome that. So let's see here. Still excited to see how they rebound tomorrow. I think that there's a strong possibility we see a rebound tomorrow for sure. Thanks again for another crazy earnings week. Yeah, no problem, Snookeroo. If you don't mind me asking, what kind of finance were you in? Says Michael. I was in two different fields in finance when I was working professionally in this space. I was in retirement 401ks, and then I was also in 529 college savings plans, specifically for the state of Alaska. So I worked with the state of Alaska. That was like the most fun part of being in the corporate world was like working with the state of Alaska because they had so many. There's different nuances. The state of Alaska pays you if you're a citizen of Alaska to live there. It's like they give a the term just escaped me. If you live in Alaska tuning, let me know what shoot. You know what I'm trying to say. If you live in Alaska, hit me up in the comments. Jeez, I was going to come out at some point. But Alaska basically pays its citizens to live there because of all the oil that gets drilled. And you can have the option of putting that money, you can take it out and just spend it however you want. You get taxed on it, of course. Or you can put it into a 529 college savings plan for your kid or your granddaughter or your niece, nephew, whatever, and have it tax deferred. So that was fun because I got to talk to so many other people that lived in Alaska. I got to know what it was. And then once I left that corporate job and decided to go on YouTube full time, it's when I actually graduated college and went back to school and graduated college at the same time as I quit my corporate job to go into YouTube. I went to college to come on the YouTube. How does that make sense? But ended up going to Alaska. And because of the amount of people that I spoke to, I got to know like the ins and outs, where I should go. Not the places that I went were not where everybody else goes, which was really cool. So anyways, a little backstory on me. All right, so we covered all the earnings. Let's go ahead and I'll pull the chart up one more time. Apple right now is down 3.8%. It's clawing its way back. It was down around 4.5% on earnings, rare earnings miss and a revenue miss. Ford came in, missed on earnings, beat on revenue. Starbucks missed everywhere. Google missed Google missed everywhere. They beat on revenue, missed on earnings per share. Didn't have great guidance. Amazon, same thing. Amazon crushed revenue by about $5 billion, but the stock's still down around 5.5%. We'll see if it hangs on. But let's go ahead and open it up for some calls. As promised, guys, I will put this in the chat. Feel free to give me a call, and I'll answer some of your questions. I'm riding a solo. Yesterday, the last couple of times I've had Don, so it's been nice to have him chatting away as I'm dealing with this. So just bear with me for a moment. I'm gonna grab a number here and put it in the chat. So thanks for sticking around. For those of you who have stuck around, and feel free to call me. Seabuck says I go to Alaska every year. Yeah, I wish I could go to Alaska every year. By far, my most favorite place I've ever visited in my entire life was Alaska. Love that. Love Alaska. Nina Lockman says is Penn announced earnings earlier today. Oh, let's see here. Hello, who's this?
Hey, Brad.
Hey, what's going on?
Hear me?
Yes, I can hear you. I can hear you fine. Who's
Stephen Hoyer from the chat?
Oh, nice. What's up, man?
Hey, what's going on, Brad? So I just want to talk today about, well, it's a great market and it's going on today. But I wanted to talk about Tesla.
Sure.
And which is always a controversial subject for a lot of viewers. But I wanted to say that I think Tesla probably stands to have some of the biggest gains ahead of the next 3 to 5 years. You talked a bit about Ford and how they are right behind Tesla, but I think when it comes down to it, like there's a couple things that separate Tesla from other EVs, and in my opinion, I think it's like innovation.
Sure.
And so I was bringing up different searches to find out like like who are the leaders in different markets around the world for EVs. And most undoubtedly, Tesla in most countries, there's a concern that China is ending their subsidy, but they still have a small, like 10% subsidy that they'll have off the tax base. There's also subsidies ending in Europe for a lot of EV makers. So I think, but even when I'm crunching all the numbers and I'm looking at everything, I'm still very bullish on Tesla.
Mhm.
And my question to you would be like, where are you seeing, I guess, the entire EV race with Tesla, Ford, all that together in the next 5 years? Who's going to come out on top? In my opinion, probably Tesla, but for you, it might be different.
No, it's Tesla 100%. And I've been pretty vocal about this, that like, obviously I like Ford, but Tesla is still going to be the king of EVs. Now, I will say, I'm going to go with the US. Tesla's going to be king of EVs in the US because people don't look at BYD. And by the way, Warren Buffett is invested in BYD, and BYD is cranking out EVs like crazy. So from a numbers standpoint, I think that BYD has the ability to overtake Tesla, at least in China. And as far as the rest of the globe's concerned, that's going to be up for debate. But China, I think BYD has the ability to take over Tesla in that regard. So, but everywhere else, I think that Tesla ends up being number one. Ford's just going to be number two. And I don't think there's anything wrong with that. But the gap between number one and number two and everybody else, I think is going to be a pretty wide margin, in my opinion. Tesla, as you had mentioned, has a lot of technology that is far ahead of a lot of these companies, but they're coming for them as well. And a lot of these legacy companies have that money to do that with. So I don't think there's anything wrong with hanging on the Tesla. You can see the weekly chart here, and it is, obviously looking like it may also reverse that trend. You might have seen me look at some of the other stocks, specifically the S&P 500 and the Qs, and starting to see that momentum shift and the trend starting to change as well. But Tesla has yet to have gotten there yet. So we'll see on Tesla. But thanks for the call, Stephen Hoyer. Appreciate it, man.
Yeah, sure. And just one more thing I wanted to point out. I was looking at a study from the Automotive News, and just in general, talking about United States sales, they said that it was the lowest year in 2022 on record. And I think in the last 10 years, they said about 13.4 million units. And to me, when I'm looking at sales, I know there's this transition. They're saying years ago, EVs was only 3 to 5%. And then I think in the coming years, they expect that to jump up to, who knows, like 5 to 10% of total sales.
Yeah.
So I think there's like a lot of market potential that's still untapped, that still is yet to be filled. And I think that, who's their number one on the list? It's always, people think of EVs, they think of Tesla. It's kind of like a common sense now.
For sure. And I appreciate the call, man. Thanks for calling in. And I'm not gonna, again, as I'd said, I don't think that we're seeing a move down in Tesla or anything like that. I think Tesla remains number one. Last year, it was a bad year for all automotive, and it had a lot to do with supply chain issues. So that's one of the big reasons as to why. I'm going to take the next caller here, and you're on the Chaos. Who's this?
I'm MMT. I follow you for quite a long time, actually.
Oh, nice, nice. Appreciate you calling in, man. Appreciate the support. What can I do for you today?
Well, I've been trading Amazon the past week, and I sold a put for 106, and I was just wondering what you thought about. What do you think the fair value is on Amazon?
That's a great question. I mean, Amazon, you look at the forward PE on this, and it's stupid expensive, right? There's make no mistake about it, it's expensive. We have a forward PE on Amazon, and it's sitting at 92 times next year's earnings, and obviously,
Yep.
the growth is certainly something to be concerned about. Right now, the growth is sitting at 10%, and that's not going to cut it for a stock that's trading at 92 times. We just obviously heard the
Yeah.
earnings as well. I don't think that I think Amazon has the potential to come back down and maybe retest that $100 level. I think it's always going to be expensive. The premium's always going to be high. And anybody who thinks
Yep.
that Amazon's going to come down and be in that 16 times like the rest of the S&P 500, I think is probably kidding themselves. But
Hmm.
I would say, I'm just looking at the chart. This is on your weekly chart right now. $100 seems to be an appropriate level that maybe over the next couple of days, if a negative reaction to these earnings continues, it may test those levels.
Yeah.
So I think that's probably where that's going to be the first stop, I think, for Amazon in the next coming days.
Well, listen, man, I appreciate the advice that you give on the channel. I love listening to you on my way to work, so I appreciate it.
Yeah, appreciate you, man.
All right.
All right, so that was awesome. I'll take one more call, guys. If you guys, anybody wants to chime in, I certainly would appreciate it. Um, this is so much fun to do. I'll throw the number back in the chat if you guys want to. Anybody wants to call in, feel free to do so. There we go. So, but yeah, Amazon obviously has had a huge move, and we'll see where it goes. But I think that $100 spot is going to be the first place. Here it comes in the next caller. Hey, what's going on? This is Brad. Who's this?
What's up, Brad? This is Michael Hanna, man.
Hey, what's up, brother? How are you, man?
Hey, not much, man. Hanging there. So, what do you feel about Apple? Are we gonna hit that 139? Please say yes.
Which stock was that?
Apple. Do you think Apple will hit the
Oh,
139 tonight?
Do I think Apple's
I
going to
see
head to?
they're
one-
rebounding.
So let's take a look right now. So yeah, it is starting to rebound a little bit. I Let's pull up the chart again. I have Apple on the weekly chart right now, and it came all the way up today to that resistance at around 150. If you guys watched yesterday's video that I put out on the expectations for Apple, I thought that 150 was going to be that resistance spot. Obviously, right now, it's now moving its way back down off of an earnings miss that we haven't seen in 7 years. I don't think it surges back up. Anything could happen. It would surprise me if it did. I think the more likely scenario is that it actually comes back down to retest the 136.50 area. If you guys look on that weekly chart,
Yep.
you can kind of see where that support rings true. I think that's probably the first stop for it. I would be surprised if it went north unless Tim Cook comes out on their earnings call and says something spectacular. That to me seems to be the more likely scenario on Apple, at least in the near term.
All right, man. Well, thanks so much, Brad. You have no idea how much we evaluate your input. So
Yeah,
please keep the good work, buddy.
thanks so much, man. I really appreciate the support as well.
All right, guys. Good luck.
All right, take care. So, guys, that's going to do it for today's show. Thanks so much. This was a ton of fun. Appreciate you guys calling in and watching and hitting that like button and all that stuff. I'll be back on Monday at 3:45 p.m. Eastern time to do this all over again. We have another round of earnings. Obviously, they're not going to be as big as Amazon, Apple, or some of the other big tech stocks that we covered this week, but it's going to be a great week nevertheless. Some of the smaller techs are going to come in, cybersecurity stocks, those types of things. So I am looking forward to that, and you should be as well. If you want to react to those with me, again, make sure you're hitting that subscribe button, hit that notification bell for when I go live at 2:45 p.m. Eastern time. Until then, guys, have an absolutely fantastic weekend. I certainly appreciate you all tuning in and hanging out with me, and I'll catch you on Monday. Stay safe out there, guys. Love you all.